The number of Australians struggling to meet their mortgage repayments has jumped materially over the past year as higher interest rates and inflation take their toll on households. Joining me now is business reporter Edward Boyd. Ed, the Council of Financial Regulators says hardship applications have risen materially over the past 12 months alone.
Yeah, so the Council of Financial Regulators, that are the big financial regulators in Australia, APRA, ASIC, the RBA and Treasury together form that council. And every 3 months, every quarter, they release a statement, basically a financial update on how the Australian economy is tracking. And this time round, this morning, their update really calls out hardship payments, the number of customers that are requesting hardship assistance from their lenders has increased materially over the past 12 months. And they're obviously putting it down to the sharp increase that we've seen in interest rates across Australia and inflation remaining pretty high. And what the statement says is, if inflation remains high for longer, then more people are going to fall into this mortgage stress threshold. More people are going to be struggling month to month to pay off their mortgage repayments. So this is just the latest update from the Council of Financial Regulators, and it's obviously a sign there are a lot of Australians out there that are starting to do it pretty tough. And the comment really came from ASIC in the statement. Laura, ASIC were the ones that said there's a lot more people requesting hardship assistance now than there were 12 months ago.
Ooh, okay, the big economic news this week is on Wednesday. It's the February inflation numbers in the United States. Why does that matter to us?
Well, that matters to us because we know the US is about 6 months ahead of where Australia is in regards to interest rates and interest rates coming down. So the speculation is if the numbers come in as expected, which is roughly a 3% reading for inflation at an annual rate in America, then it will kind of show that the US Federal Reserve, their higher interest rates are higher in the US. They're at 5.5%. There's a chance that we could start to see some rate cuts around May in America. And if the US starts cutting interest rates, it's going to really put more pressure on our Reserve Bank to say, hey, we've probably done enough as well. It's probably time for us to start reducing rates too. So if numbers come as expected on Wednesday, we could see some rate cuts by the US Federal Reserve within the next couple of months. And then we could see, hopefully, some rate cuts in Australia. Right now, they're being priced in for September, but that obviously can change depending on what the data says.
That's been bouncing around a bit. What's the timeline done there? I think some economists are saying not to the end of the year. Now they've brought that forward to about September. Is that right?
Yeah, so there's a mixed bag on the economic front. Some economists think we could see a few rate cuts this year starting in September, so potentially 3 rate cuts this year and 3 next year. That's what the Commonwealth Bank are pricing in. And we obviously saw the kind of weak economic data last week. Remember the GDP numbers for last year. Outside of the pandemic and the GST year, it was the weakest year of economic growth since the 1990s, so in roughly 30 years. So to help stimulate the economy, the argument from some economists is we need to see rates go down. So we are looking around that September month for the first rate cuts in Australia.
Asking for a friend, of course.
Of course.
See you soon.
Thanks, Laura.